You're watching the Tuesday edition of Market View right here on Eswatini TV. I am Notile Sitole, glad to have you on the program, and I will be joined on the program today by business journalist Nelswe Ndlangamandla, who had a conversation with the Minister for Finance, Honorable Nur Reichenberg, on the country's current fiscal standing. The budget for the current financial year was 36.92 billion emalangeni, up from 32.61 billion emalangeni in the 2025-2026 financial year. Now, for the current year, the minister has said that the budget was pro-growth, pro-discipline and pro-investment. However, priorities have taken a different turn due to the promised salary review exercise and persistently delayed supplier payments, among other issues. We'll get to the gist of things as the minister sat down with my colleague responding to some of her questions. But first, our business stories. And moving on to our business stories, approximately 200 jobs are set to be created as Eswatini Quantum Works Pty Ltd investors, or they invest more than 600 million malangeni in a new manufacturing factory to be built at Nogwane. The company, originating from Turkmenistan, will produce aluminium cables and copper cables for the export market. The Minister for Commerce, Industry and Trade, Honorable Mangoba Khumalo, commissioned the project, which is under the special economic zones at the Royal Science and Technology Park.
We are here to hand over a construction site that will be used to erect a structure, a manufacturing building for this company that has decided to invest in Eswatini. This company is called Quantum Works. It's a company that originates from Turkmenistan. It has a parent company in Turkmenistan that is called Aydin Gijala, and this is the work that His Majesty initiated when he visited Turkmenistan in 2024, and we're really happy that after several engagements after His Majesty's visit, we are now in a position to officially launch the first project by this great company in Turkmenistan called Aydin Gijala, who have registered Quantum Works in Eswatini to start the phase one construction of their multi-phased projects. We will in time be introducing further projects that this company will do as it grows in the Kingdom of Eswatini. The work that they're going to do here is going to be done by a local company called Stefanuti Stocks.
Dr. Rejoice Masego, representing the Principal Secretary in the Ministry of Information, Communication and Technology, Prince Mshishimba, says the project is a welcome development that will create employment opportunities and contribute to the country's economic growth.
We are so excited because this initiative promises to employ Emaswati, not only just ordinary Emaswati. We see a situation where even our, actually when it comes to tax, the country will reap.
Eswatini Investment Promotion Authority Executive Head of Investment Promotion Martin Masilela further unpacked the over 600 million Malangeni investment, saying the project falls under the Special Economic Zones program and is expected to attract more investment into the kingdom.
So RSTP has allocated about 8 hectares, 8.2 hectares to be more specific, for the construction of a factory. The initial factory size will be 4,000 square meters. That will be employing around about 200 people, 150 skilled and then 50 unskilled. So the company is registered, actually there are two companies that are registered for this company. So it's Aydin Gijela, which is the main parent company, and then we've got Eswatini Quantum Works, which is a subsidiary of Aydin Gijela, Eswatini.
Project manager at Eswatini Quantum Works Pty Ltd has promised inclusive economic development, emphasizing the company's commitment to hiring eMaswati and creating meaningful employment opportunities throughout the project life cycle. Stefanotis Stocks is the company responsible for the construction of the factory. According to the Eswatini Investment Promotion Authority, the project is on track for completion within the next 2 to 3 years, marking a significant milestone in the country's industrial development agenda. Reporting, Nelson Dlangamandla, Derek Msibi, Nogwane.
Eswatini recorded a positive trade surplus of 78.4 million emalangeni last month, falling significantly in comparison to the trade surplus of 793.8 million emalangeni recorded in April this year. This is according to the recent Economic Development Report for April and May this year. The report states that the narrower surplus was mainly attributable to higher import growth against falling exports in the month. Exports declined by 2.3% month-on-month to 3.6 billion emalangeni as sugar exports were lower in the month under review. On a year-on-year basis, exports increased by 19.2%, reflective of nominal growth in the value of soft drink concentrates and textile exports in the month. Imports totaled 3.5 billion emalangeni in the review month, growing by a significant 21.9% month-on-month, influenced by a rise in food and textile imports. Year-on-year, imports increased by 3.0% compared to the same period last year. Seasonally adjusted estimates indicate that exports amounted to 4.0 billion emalangeni and imports to 3.5 billion emalangeni last month, resulting in a seasonally adjusted trade surplus of 547.2 million emalangeni. The January to May cumulative trade surplus amounted to 2.0 billion emalangeni, a surge of 33.1% from a 1.5 billion emalangeni surplus reported in the same period of 2025. Year-to-date, exports amounted to 17.3 billion emalangeni, which is 2.9% higher than the prior year, while imports amounted to 15.3 billion emalangeni, marking a marginal 0.1% annual decrease. The direction of trade analysis indicates that South Africa continued to be Eswatini's leading trade partner in May of 2026, accounting for 72.0% of exports and 70.8% of imports. Other significant export markets were Mozambique, Nigeria, Kenya, Tanzania and Zimbabwe, accounting for 15.9% of total exports. Collectively, China, the United States, India, Ireland and Germany accounted for 16.9% of total imports for the month. And you're up to date with some of the latest in Business Market View continues after this.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Mbabane. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back. And moving on with the program, the Minister for Finance, Honorable Nuraikenberg, has said that currently government is facing financial constraints. To gain a better understanding of the factors behind the current fiscal challenges, our business journalist, Nelsiwe Nlangamandla, a good colleague of mine, sat down with the minister for an in-depth conversation on the matter. And she joins us now in the studio. Nlangamandla, good afternoon. Thank you very much for joining us in the studio. Maybe allow me to ask, journalist to journalist, what prompted you to actually pursue this conversation with the minister?
Thank you so much, Notsile, and good afternoon to the viewer at home. So we must understand, Notsile and the viewer, that the budget is basically a plan of the expenditure that government is planning for the year, and it's against the revenue that government is going to collect. Government has to collect from money from the Eswatini Revenue Service, SACCO receipts. There is also other taxes that government has to collect money from in order to fund this budget. So I basically wanted to understand when the minister says government is currently facing financial constraints, what does he mean? Where did the money go? We understand that the budget that the minister tabled was not a fully financed budget. So I wanted to understand how much was collected at the moment, what is really causing this challenge. Viewer, let's just listen to what the minister said when I asked him that.
So one must keep in mind that last year we went for a supplementary budget. Now normally as a country, in fact in my term as a minister, when we go for supplementary budget, we normally cut somewhere in the budget and add somewhere in the budget. Last year, for the first time, we went for a supplementary budget that increased the ceiling of the budget. It asked for more budget for the year. In fact, it asked for 3.8 billion emalangeni. So it was a large supplementary budget that we asked for last year. Now, the 3.8 billion was made from strategic oil reserve. Because of the crisis that we had, we decided to accelerate strategic oil reserve, looking at the current world crisis. If the oil reserve was in place, we would be doing a whole lot better on the fuel crisis than what we are doing now. So showing the importance of it. So we decided to do the strategic fuel reserve, even though it wasn't in the budget. We decided to finish the ICC, which wasn't fully budgeted for. That added on top. We did the salary review, which again, we had 500 million in the budget. I think it cost almost 1.4 billion last year's salary review. That we then covered in the budget. There was additional travel expenses. There were additional reenact expenses, things like that. All together making up 3.8 billion. Now, the problem with the 3.8 billion, only 1.5 billion was funded. So 1.5 billion was from the strategic oil reserve loan that we have with Exim Bank Taiwan, which meaning 2.3 billion was not funded, meaning that now creates a cash flow pressure in which we are currently dealing with. At the same time, we had a problem where our tax collection was less than what we budgeted for. So we had projected our tax collection to be 16.5 billion last year. Unfortunately, we did not collect 16.5 billion. We collected 15.8 billion, which was still a very good collection, still a high percentage more than the previous year, but under with 700 million. Meaning that when you do that, it means you've spent the 700 million, but you haven't collected it. You haven't got it as tax. Add the 700 million to the 2.3 billion, you've now got 3 billion, which we now are behind on. Now comes this year's budget, which is again very clear. I've tabled the budget, and in my budget, very clear, we need to raise 1.5 billion emalangeni to even fund this year's budget. So unfortunately, we now are having, by the end of the year, we are going to have a 4.5 billion emalangeni need for financing. Now, yes, this is all for, most of it is for very good things. The budget's increased because we're focusing on making more roads. We're really doing a lot of good things with the budget, and even the supplementary. It was strategic oil reserve, it was COLA, which was necessary, or the salary review necessary, it was the ICC finishing. So all these things were very good things. It isn't really necessarily wastage or even recurrent expenditure. A lot of it is capital expenditure, but it was over and above the budgets that we had. And so yes, we are going to the market for 4.5 billion emalangeni. It's going to increase our debt stock that we have. But again, if we don't raise it, it means we're sitting with suppliers not paid. We're sitting with unfunded projects in government, which is really the problem. We plan to do roads, and you just don't have the money for it. So yes, just for clarity, we're going to the market for 4.5 billion, and that's the reason why we have those numbers.
That was the Minister of Finance. He's saying that government is going to need to raise about 4.5 billion emalangeni to finance some of the operations. The salary review for civil servants being one of the major issues here, because government has to take the SACCO receipts. The over 2 billion emalangeni has to, part of it has to be used, about 850 million emalangeni for the review.
Nelly, I heard the minister mention the word suppliers, and often he makes a particular promise to say government has received this much, and from that amount, suppliers will have to be paid. They will take priority. Weeks later, we learn in different headlines that suppliers have not still been paid. What did the minister have to say on that one in your conversation?
The issue of suppliers has been a thorn for a very long time, and we have to give credit to the Ministry of Finance because they've really tried to ensure that suppliers are paid on time. The minister specifically stated that now at the Treasury, the supplier might put all their documents in other departments, but at the Treasury, they are usually processed they are working on ensuring that they are processed in 30 days, but right now it takes about 40 to 45 days, so they are working on cutting that. I want us to take a listen to the minister when he speaks about suppliers, because this has been a very thorny issue for a very long time.
At the moment, within government, we're paying suppliers, but we are running a little bit behind on paying suppliers. So right now, money is tight, and we are trying to put some measures in place to raise this money. In fact, in this year, we will be raising budget support again, but the budget support will be coming in later in the year. So in the meantime, we're seeing what we can do to raise some money in the short term, just to be able to cover us until we get to that stage. Obviously, taxes come in every week, and we use the same taxes to settle arrears and to pay suppliers. But we are, like I say, at the moment, cash is tight within government. So yes, normally with SACCO will come and give us a relief. We are getting, at the moment, we get around 2.9 billion emalangeni SACCO receipts. And we will be really making sure that, because as a government we made a commitment, we've signed agreements with the unions to make sure that we actually pay what we call the back pay for the previous year. So in the previous year's salary review, we didn't pay the back pay then. We only paid 15% of it. There's an 85% of the back pay that is still was promised to be paid now in July. And the reason why we said July was because we knew SACCO receipts is coming in. And so for that reason, it'll be very wrong to now use the money for something else, because it's been earmarked for over a year to pay civil servants that back pay. So we'll keep our commitment. When SACCO money comes in, we'll really make sure that 850 million does get earmarked and does get paid towards the civil servants back pay. And so yes, for that reason, and again, by doing that, it'll mean that cash remains tight within government. And that's why we're going to the market to try to raise, even on the stock exchange, Johannesburg Stock Exchange, we'll be trying to raise money there to be able to get relief for government cash flow pressure.
The Honourable Minister is saying that government needs to raise about 4.5 billion emalangeni. So what I want us to note here, Notsile, is that most of the time when the minister tables the budget, usually that budget is not fully financed, but the loans at the time when he tables the budget, you find that he has already borrowed the loans. So what we are seeing here is that the minister is still going to borrow these loans, to ask for these loans. He said he's been speaking to the World Bank, the African Development Bank. He's going to go to the Johannesburg Stock Exchange for these loans. So now the budget is here, work is already ongoing, but the minister says we are yet to get this money. So this is not usually the case in some of the budgets that we have seen. So I've spoken to an economist before I came here who explained that we are still going to see a very tough couple of months because it's like government is working from hand to mouth now, because the money that comes in, for example, the revenue from Eswatini Revenue Service, when it comes in, government uses that money. The SACCO receipts are going to come, government has to use that money. So the economist has said it's going to be a very tough couple of months until the minister gets the 4.5 billion emalangeni, as he has stated that he's working towards it at the end of this year.
Thank you very much, Nelly. From fiscal challenges to economic policy, that's exactly why we have the show and we tackle some of those conversations. We just listened to a couple of inserts there after the Minister for Finance, Honorable Nuri Wakenberg, was in conversation with business journalist Nelsiwe Ndlangamandla on some of the realities of where Eswatini really stands fiscally. After the break, we speak to in-house economist Sanele Sibia.
Those that are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare that a turnaround is coming my way.
Turnaround is coming in my life.
Welcome back. I'm moving to our market analysis segment. In-house economist Sanele Sibia joins us virtually. Mr. Sibia, good afternoon. Always a pleasure talking to you. So markets are still in a very celebratory mood after the US-Iran deal. Just allow me to ask, does this mean that they will now begin to price out the inflation shock that has been dominant over the past 3 months?
Thank you, Notile. Good afternoon to you and also good afternoon to the viewer. So yes, we do expect markets and investors to start pricing out that inflation, those inflation worries. And I think that is actually quite contained in the story around gold beginning its uptick because, investors are now starting to price in a stable price environment. And we are seeing that supporting the tech stocks and also supporting the bankers and the miners there. So yeah, that's one of the things that we are looking at, and you do know that this is actually going to be something that's going to happen over the next 60 days. So what markets are doing right now, they're entering into what we call a risk-on type of trade, where we know that there is a looming risk hanging over markets, but we just traders continue trading as though that risk is not there, because we are entering right now the next 60 days where the US, Iran, and Israel are actually going to be on the negotiating table, and we're going to see if we're going to get a lasting peace deal, not a ceasefire, as it were. It's a ceasefire that's supposed to allow for negotiations, and we might actually look at forward to getting a peace deal. And the fact that we've got this agreement does show that we are most likely going to get that deal. So starting in the US, the Dow Jones Industrial Average has hit another record yet today, gaining 468 points, and the Nasdaq Composite has gained 795 points, and the Standard & Poor's Index gained 122 points. Now that's due to the fact that the tech rally continues, and then also we are seeing those positive news coming out of Washington and Tehran. So we're looking forward to Friday when that deal is finally signed, but in principle we do have a deal on the table. And then we move on to the European markets, starting in London. The FTSE 100 is up 59 points. The German DAX is up 164 points, and the French CAC 40 is up 60.52 points. We are seeing Paris there moving up to those 8,400 mark, which is an all-time, it's a 2-year record in Paris. We've not seen that for over the past 2 years. And then coming back into London, we see with the FTSE 100 has actually climbed up the 10,400 mark. Remember, during the war, it was sitting steadily at the 10,300 mark. So most likely we are going to see London going back to those all-time records of 10,800 that we saw before the war. And no, we do expect that to happen probably in the next month, in the next 4 weeks. And then coming into Japan, yet another record, and earlier on in the day, the Asian market there, Japan actually hit the 70,000 mark. So Japan is continuing to shine on records, largely due to the fact that we're seeing stabilizing monetary policy in Japan. That means we've come out of that negative interest rate, if you recall, in the last couple of years. And, interest rates are continuing to climb, and the businesses continue to receive that support. So now that gives hope onto the economic stability within Japan, because we were worried about the transition into those markets. And then coming into the Hang Seng, we're seeing the Hang Seng sitting steadily at that 24,000 mark, losing 384 points in today's trade. And then the Shanghai Composite Index is back on the 4,000 mark, and it has actually lost 4.58 points in today's trade. Now that's because we are also seeing mixed economic data coming out of China. We're seeing retail, we're seeing subdued retail activity as well there in China. So we're seeing a mix of an uptick in the tech stocks, but the retailers are there pulling the markets down overall. In South Africa, it's June 16, so we know that's a holiday, so we don't have numbers for that market. And then in Eswatini, the Eswatini Stock Exchange remains steady. It's flatlining at 501.24 with no changes there. In terms of gold, we're seeing gold ticking up $4,368 per ounce there. Now that's because when you price out inflation fears, you're also pricing out the possibilities of interest rate hikes. So right now what markets are looking into is probably interest rates holding steady for the next 2 months, and then depending on what happens after those 2 months, we're then going to see more movements there. So we're seeing gold regaining ground there because interest-bearing assets are not going to move much, given the fact that we have that peace deal in the Middle East. And then we're seeing Brent crude oil continuing its descent, sitting at that $81 per barrel mark. And remember, just a couple of days ago, before that announcement, that tweet or by President Trump, was it a tweet or it was a Truth Social post where he says ships of the world sail on. We've seen the price of Brent crude oil coming down from the $98 per barrel mark, resting on that $81 per barrel today. And as we signed the peace deal on Friday, we're most likely going to see the price of Brent crude oil coming back to that 70-79 region, and then eventually resting at that 75 region over the coming 2 months. And then we're looking at currencies as well. Because we have a peace deal now, we are seeing currencies flooding back into emerging markets there. So we're seeing the USD to the Lilangeni sitting at 16.12 in today's trade, up 0.33 points. The euro to the Lilangeni is struggling against the euro, standing at 18.73, and then also stronger against the Japanese yen, as we are seeing that currency pivoting back into those emerging markets. Thank you, Notsile.
Thank you very much, Mr. Sibia. That was economist Anela Sibia coming through with insights on the day's trade. Otherwise, this has been the Tuesday edition of Market View from myself and the team. Thank you very much for your company. Let's meet again next time. Take care.